All righty, folks. Expert Series video number 3 with Greg Dickerson. How you doing, sir?
Doing great, Michael. How are you?
I'm doing all right. So I want to paint for you what I think is a pretty clear picture of 2021. I want you then to tell me where I'm. First off, tell me if you think I'm wrong in any of these, because I think it's pretty clear. I'd love to hear if I'm wrong so I can research it more. And then you're going to be able to react to any of these. Is that cool?
Yep, sounds good.
All
I
right.
know
So
people want us to argue, so throw something out there.
I don't want to argue with you. I would lose. So here's my 2021 pretty clear. 1, lots of government spending. 2, cheap debt interest rates. 3, asset inflation. 4, consumer spending will come back. And lastly, huge dry powder, right? We're talking about $5 trillion sitting on the sidelines. The things to watch out for is inflation, right? If the economy gets going and it's too hot, inflation is one of those things you should watch. And then finally, if inflation gets ahead of itself at the end of the year, does interest rates rise? So those are the things I'm looking at that I consider pretty clear. What do you think?
Yeah. So I'm not sure about consumer spending.
Okay.
That's going to be the real question. Once we get through the holidays and, what things look like going into next year, what is that consumer spending going to look like? A lot of what we've seen up to this point has been people, modifying their environment to deal with, COVID and shutdowns and remote school, remote office work, things like that. We have the holidays we're going into, stuff like that. And a lot of the discretionary travels down, so the people that were traveling and doing stuff, they're spending more money locally. So that'll be interesting to see what consumer spending looks like. But yeah, right now, looks like interest rates should remain low. The government is going to throw a lot of money. The question is, where's it going to go and what is it going to go to? Right now, they're throwing it absolutely at the wrong things. And, that is a bubble that's being created that is going to burst and unwind. And I'm talking about risk assets. I'm talking about equity, stocks, bonds, Bitcoin, gold, all of it. It's going to blow up. And, it's going to come home to roost at some point because they can't keep putting the money in that direction because they can't capitalize and provide liquidity to the entire markets endlessly.
Mm-hmm.
Now the question is, where are they going to put the money? What are they going to spend it on? So, that could have a real impact on the economy in terms of trying to get people back to work. And if there is some infrastructure spending and plans and things like that, where it needs to be, that can create, some economic activity and, can help bring the consumer back to where they're spending money, which should create some inflation, which is what they want to try to, the Fed, they want to create some inflation that's healthy, which should increase interest rates and things like that. So the big question is, where's the money going to go? What is it going to be spent on? And, what does the real recovery look like once we have a vaccine? Everybody's taken care of that wants it. And, the switch is flipped and hotels and movie theaters and restaurants and travel and everybody's back on.
Yeah. So if you're an investor sitting here in December of 2020 and you agree with at least some of my clarity, what is one to do? Right. Let's assume, right, the K-shaped economy is something I've been talking about for a while. Let's assume you're on the top end of the K. So you're not worried about just food and rent, right? That's a different conversation. Let's assume you're still employed. You can work from home. You're getting by. You're probably saving more. What is someone to do if that's what you see is coming?
So you got to be, you have to be careful. You need to know the top and understand what the top is and what you're investing in. So if you're investing in stocks and the market's maxed, we're just not going to see a lot of
Down
upside from here.
30,000. Yeah.
Yeah. I mean, I didn't think it would get there before it, sold off again, but I didn't think the government was going to do what it did and step in and start literally buying stocks,
Yeah.
So what they've done is unprecedented, but that is going to stop because the political appetite for that is fading. And the political will of the people, it's fading, just like the shutdowns. When you have law enforcement come up and say, we ain't going to enforce any shutdowns.
That's happening in Cali right now. Sheriffs are like, dude, we are not doing that. Good luck.
So I think you have to be smart about what you're doing. So real estate, stock market's one thing. And, there's companies you can pick and choose and there's some IPOs you can get in and get out of. But to think that you can go in now, long term, and do well, I think is kind of crazy. The only reason you're at where you're at is because the institutional investors, hedge funds, pension funds, and all them, don't fight the Fed. They're being forced into those assets because there's no yield anywhere else.
Hmm.
And they don't need much. Okay. They're moving billions of dollars to hundreds of billions of dollars. They don't need much. The average retail investor, you got to be a little bit more smart about it. You got to be a little bit more patient, and you got to be willing to, go against the tide. Okay. When everybody's buying, you need to be selling. When everybody's
Yeah.
selling, you need to be buying. And, just kind of watch those things. Real estate, there's always opportunities because of the interest rates and the way you can structure deals and things like that. So, at the end of the day, if you lose some value in real estate and you still have income, you're okay.
Hmm.
If you lose value in stocks, you've just lost your money. There's just,
Yeah.
there is no okay there. And then, like if the market goes down 50% and comes back, well, you didn't come back 50%. You went down 50 and you came back 50 from there.
Right.
Real estate, is a little bit different,
Yeah. I think it's really interesting because the one thing that I always watched is, quote unquote, what's the rich doing? Buffett has that quote about you only know who's swimming naked until the tide goes out.
Mm-hmm.
$5 trillion in money markets, the amount of hedge funds that have raised capital to get ready. They're not in the market, right? They're letting the cash just, theoretically sit there because they're waiting for the opportunities. They will strike when there's blood in the streets.
Yeah.
And
Hedge funds are down, across the board right now. They're not doing well with the market where it's at.
Yeah, they didn't expect, just like you said, right? They didn't expect the Fed to come in and start buying stocks, but they're getting ready, right? There's Invitation Homes, and again, people that are playing in my area, single family homes
Mm-hmm.
that own tens of thousands and looking to buy tens of thousands more. So that's one of the things that I'm pontificating. And actually, I'm going to do a video on it later. I'll just share it here as a tease. Las Vegas. I've been pretty adamant that Las Vegas market is kind of fake right now, right? They've had 5 or 6 months of record price setting. They have 20% unemployment. They have 87% collection in rentals. So it's just bad. What's happening is there's been a lot of inventory held back because of forbearance and all of these things. So I think a reduction is coming, right? When inventory shows up, stress shows up. But now what I
If
think,
those jobs don't come back at scale, which means people need to be, flooding to Vegas, once this is lifted, and, I don't know if that's going to happen.
I think the odds are unlikely. There's going to be an air pocket. There's going to be a gap. And what I'm seeing now is I actually see like Invitation Homes and that ilk salivating to buy, because I think it's going to be like a 6, 9, 12, maybe 18-month window, what I call the air gap, because
Mm-hmm.
Vegas will be back, right? Is it 2023? Is it 2024? Whatever it is, but it won't be back in 2021, right? The risk profile. But Invitation Home, with their billions of dollars, just like 2010, they bought entire portfolios sight unseen because they have their hold period is years, if not a decade.
Mm-hmm.
So I don't think the pain that I thought was possible in Vegas will nearly be as deep, because Invitation Homes will say, hey, we'll buy them. We'll take a 10% discount.
The difference now is back, 2008 and 9, when those packages, were being purchased, they were being purchased from they were toxic assets that were being purchased off of the books of the banks.
Yep.
So they were selling these, these houses at scale, whole packages of mortgages in default. Right. And a lot of them were just securities. So, BlackRock was one of the buyers, and then they created this facility to be able to manage it. The difference is nobody was buying individual homes at scale back then because it just wasn't, they didn't have the mechanism for it. Now they do. Mm-hmm. So there's a lot of different companies that now have the mechanisms to buy homes at scale individually, right now. So that's a different animal that a lot of the, pontificators about the big housing crash just aren't taking into consideration, is that the amount of buyers out there now that weren't there the last go around.
And they're ready. Their infrastructure is there, right? They can now
they got the money, they've got the systems, and I mean, Warren Buffett, he said, man, I'd buy every house I could if I could figure out a way to do it. Well, they figured out how to do it now.
Yeah. And there's some of them have hundreds of thousands of homes in select markets. And I really do think they're going to come out and they're going to put a floor into the market, right? Where Vegas, using the trend that I saw 6 months ago, I was like, ooh, there could be a 30% price hit. Just guessing, right? Just pure guessing.
And the banks have been shored up. So what the Fed is doing and Treasury, what they've done now for the banks is they've allowed them, by providing the liquidity to shore up their balance sheets. If you notice, all the banks are, making record money during the pandemic while everybody else is sucking wind. And they're doing that because they know there's going to be some write-downs. So what they're telling the bank is, hey, we're going to flood you with liquidity. We're going to keep these rates low, build capital, raise capital, build your trading desk, because you're going to need that money to offset these assets that we're going to ask you to take a haircut on. So that's kind of what's going to happen. And even from a global debt perspective, at some point, there will be a sit down between all of the countries that, own each other's debt. And it's all right, guys, we're all just going to kind of level the board here. And, everybody's taking a little bit of a haircut. So, that's kind of where things can get to at a certain level. But, the United States is different. We can print, and, seemingly without recourse so far, because it's been going on since 2008 and 9.
Yeah. So one of the things I'm thinking about Vegas now is the repricing value fall won't be as deep as I initially thought, because I'll just call it Wall Street. I don't know what else to call it. Wall Street, deep pockets, hedge funds, whatever. They're going to put a floor. They're going to say, hey, 15% discount is enough. Because again, the gap, the air pocket will be in Wall Street speak short-lived. It'll be 2-3 years. And they're like, shoot, what, we can hold that. They have near unlimited holding period. So
you have them. You also have note investors. So, there's a whole business out there where, institutions will come in and buy the notes and they'll get them performing, and then they'll spin them off again. So you've got note buyers, you've got, asset buyers that are buying the real assets. You've got, and individual investors out there that are buying houses that are in distress. So, and the market is red hot with interest rates where they are. So, I think that inventory can get absorbed. The real question is, how long will it take, a market like Vegas to come back, with the convention business, the casino business? I mean,
it's all about the conventions.
Traveling.
Yeah. For me, it's the conventions. Yeah. But it will come back. I think that's true. It's the win. And my crystal ball is as good as yours. I have no idea.
Yeah.
Very interesting. Well, very, very cool, Greg. This is always fun talking to you. I appreciate our Mondays. You kick us off strong. This has been a great set of 3. Thanks, man.
Yeah. It was good to see you.
Thank you, buddy.